you have a keynote, so good luck with that.
Thank you.
Take care.
Okay. Checking everybody can hear me at the back. Oh, there's some very somber faces this morning. Come on, it's not that bad, is it? Everybody doing okay? Good. It's a tech convention. You're not waiting to see your doctor. Everybody's all right. Come on, smiles. Okay, so do I need a clicker? Do I have a clicker? How do I change? Shall I just point at you when I want it? Ah, here we go. Stand by. This went much better in rehearsals, I promise you. It was. Thank you. Next and back. It can't be any more simpler than that. Okay, fantastic. So let me introduce you to me. You wonderful people have got me for the next 15 minutes. So truth be told, this is a great time for you to go and get a coffee. If you don't know me, my name is Cal Evans. I'm the Managing Associate of Gresham International. I'm a lawyer. For those of you who do know me, keep quiet. I'm going to be talking today about blockchain companies and the emerging trend of crypto IPOs. This is something that interests me a lot because I actually see it as the natural progression for a number of companies that operate in the crypto and Web3 space. So this is actually very exciting to me. About me, we did that. Let's go through a couple more highlights. Sure, why not? Written a couple of books. I write in crypto media. British Blockchain Association founding board member. We work with the UK government on the all-party parliamentary group on blockchain technology. And I've been an advisor to a couple of different governments and written a couple of different laws and regulations around the world. So, what is an IPO? Well, it's an initial public offering. That is basically when a private company decides to go public. There's various different ways of doing it. You have SPACs, reverse engineering, or direct listing, but effectively it's that. It's where a private company decides to take its shares public. If you don't know the difference between a public and a private company, it's like it sounds. Public companies list on a public market, you can purchase them directly or through a broker, and a private company is something that you can own yourself. The process involves audited financials, filing with regulators, going through a very lengthy procedure. There are lots of different stock exchanges throughout the world. Many people just think of NASDAQ or the London Stock Exchange, but there are many different ones that I'll talk about in a little bit. And really the benefit for the company is you have the ability to raise a serious amount of cash and become a lot more liquid than you have been. So it's mixed emotions, right? It's a very lengthy process, it's very expensive, but you have the opportunity of of improving a market share. Now, I break this down into two different types of companies when I look at the crypto space. I say firms that operate within the crypto space. And by that, I mean service providers, marketing, media, mining, exchanges. And those firms that are only crypto. So think of companies that are, we issued a token, we only kind of work in Web3, that's our own thing. And I know that line can get blurred a little bit, but that's pretty much the distinction that we draw between the two. And that's an important distinction when it comes to public companies because one of them has a very natural progression and one of them has a legacy. Airways flight last night. First time I've done it. It's a red eye. Yeah, I know, thank you. Oh wow, that's much louder, thank you. So I took the British Airways flight last night, and for those of you who are interested, you take off at 9:30 p.m. and you land at 5 a.m. And I thought, brilliant, red-eye flight. I loved it up until the point a 6-month-old baby came and sat right next to me. So if any of you are thinking he looks like he needs sleep, you're probably not wrong. But here we go, we'll carry on. All right, let's hope this one holds out. This is much louder, isn't it? I feel like I have to hold it back. Okay, so crypto companies, why is there a difference in them? Because there is a very natural progression in fundraising and community-based interaction. If we think of this very logically, crypto companies usually have a fantastic community behind them. That is something that many other companies do not have. One of the things that I have always spoken about with startups and companies in the crypto space is their ability to leverage a community. And really, what that means is you've got the ability to very quickly get a huge amount of market intelligence and a huge amount of market engagement very easily. One of the conversations I had with a very large firm that has a huge community is, why don't you talk more to them, right? Because when you talk to a community, what you're doing is you're getting what legacy firms call engagement, marketing engagement. that one. Try that. Try that. Oh, okay. Shall I hold this one as well, just in case it switches? All right. Okay. So it's a very natural progression. You get a huge amount of marketing intel. And by the way, before this existed, companies would pay an insane amount of money for market intelligence. If you don't believe me, go and talk to huge firms about how much they pay for market intelligence. And crypto firms get that almost for free. And how did they get it? Well, they have the ICO. That was the initial coin offering. We all know it. We all love it. We all went through the 2017 run. Hang on. How many of you went through the 2017 craziness? Don't be shy. There you go. There's the guys that survived it. Okay, so the initial coin offering, for those of you who weren't there, it's the first time a crypto is made available by a company that is selling it, or I should say a company or a group if it's DeFi. So you have a public sale. Then we went through the STO phase. If you're not familiar with the STO phase, this was a bit of a bubble about 2 or 3 years ago where companies went through a phase of tokenizing their securities. Some governments changed their laws, Lebanon, Wyoming, and they specifically allow companies to issue digital shares on the blockchain. So we had the STO. It wasn't quite a public offering because you still did it through some kind of exemption, but it was still an ability to raise more capital nonetheless. And then we have the IPO, the initial public offering. And when we look at this, what we actually really create is a very organic life cycle. And you think of it in 2 ways. Engagement, 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 building your market share, building the amount of people that are interested in your company. And selfishly, you're thinking of it from finance. Money coming in, money coming in, money coming in. So it's actually a very natural organic progression. And that's why I call it the evolution, okay? Crypto companies have a life cycle, but what does that really mean? It means companies are used to, I should rephrase that, crypto companies are used to dual governance models, which effectively means other people making an impact or calling the shots. Now, when you go from running your own private company, it's you and it's sometimes your VCs or your investors. Actually, hands up, how many of you have raised money from VCs and investors? You're lying. There's no way there's only 2 of you. Okay, so for those of you who haven't, there's a guy at the back that just ran out as well, by the way. I don't know if his VCs are in here. So for those of you who haven't, you basically become dependent. I don't want to use the term a slave, but you kind of become a slave to your investors, okay? You have to listen to them, you have to nurse them, you have to tuck them in at night, you have to remind them that everything's okay, and it really becomes very, very cumbersome. And what this means is in this crypto model moving into the IP world, you're used to it. You're used to a community. Talk to some of the companies that raised by selling a token. And really what they have behind them, if they did it right, is a community of a few thousand people. And if you ever want to see anything intense, go on an AMA session, an Ask Me Anything session, with a bunch of people that bought a crypto. I mean, it's intense. But what you get is a governance model. You're going to people and you're saying, give us your opinion, tell us what you think. And as we got more into the DeFi age, that governance piece became important. For those of you who don't know what I'm talking about when I reference governance, again, it's literally people making decisions in the company. There are some companies in the DeFi space that are structured so that only token holders make the decisions as to what happens there. Sounds kind of like a public company, right? Public company shareholders. Crypto company token holders. Now, I want to draw the distinction. I'm not saying that owning crypto gives you the same rights in a company as shares do. That's a very different thing. But from a user perspective and an owner perspective, it feels very much the same. You have this dual governance. But you are not reliant on VCs. And what does that really mean at the end of the day? It means you keep your cap table. Your shares are yours while you go through the crypto evolution. So why does this become exciting? And I'm staying on this trend of crypto evolution, right? ICO, STO, IPO. Well, now ICOs are regulated. This isn't something we had back in 2017. We talk about MiCA. We can talk about many different countries, the UAE, the British Virgin Islands. So many countries now have a regulatory framework for issuing a crypto. So it's legal. So gone are the days of trying to explain to your father why that magic money you bought on the internet really isn't a scam, because it's actually regulated by somebody now. So we get rid of that. The STOs, well, they still exist. And there are still these markets out there that trade security tokens. They are their own exchanges, they have their own methods. And then IPOs, well, we know how regulated they are and how much they can help a company move forward. Now, service companies, I'm going to switch back to this for a second. When we talk about service companies, these are more like standard companies. So when I talk about the evolution of the crypto sphere, I mean ICO, STO, IPO, company that sold crypto. Service companies that work in the crypto space, well, they're a little bit different. They don't benefit from it. They haven't issued their own crypto. They don't have their own community behind them, so they're more like a standard company. And it really doesn't matter what they do. But if they haven't had the opportunity to do an ICO or an STO, then they can go straight to an IPO. Kind of like Monopoly, right? Do not pass go, do not collect $200, go straight to Mayfair. I don't know what the streets would be in Georgia, actually, if you play Monopoly. So you can already look at the companies that are listed as service-related. Great example of this, Coinbase. Coinbase never created their own crypto token. They never ran into the ICO market. They are within the crypto space. They are a service provider, and they are now a public company. That's a great example of this. Great example of a crypto company that's looking to go public, Ripple, XRP, pure crypto ecosystem relies on that crypto token looking to go public. So two very good examples there. So what does this mean? Well, for new companies, you actually have a good roadmap in front of you now. Remember, if you're looking at funding, if you're looking at building, if you're looking at strength, you can go through an ICO into an IPO, and you're used to it. You've got a community behind you. You've got many users of your ecosystem, and you have a governance protocol where you're used to asking for permission. You're used to going to a group of people and saying, can I do this? Which is, by the way, what you do when you conduct an IPO. You're going to the public, and at that point, the public owns your company. Or, you know, one of the big three huge legacy companies that comes in and buys it. It's another conversation. So a new company should plan and should put into its future an IPO. And this is one of the things that I talk about with so many founders. Whenever they talk about raising money, and whenever they talk about creating that sex appeal for investors, and apparently there's only 3 of you in this room who have raised from investors. So I'm going to assume that the rest of you at some point might want to do it. Why not promise them that you will go public? It's not impossible. In fact, it's actually now very easy in this day and age. And if you take your crypto element, you've already got your community, and what you can do is say to those people, well, you've bought our crypto, why not buy our shares? Right? You like us so much, back us. You like what we do so much, get involved. And you get to build on your rights. So when you're going out to the community or you're going out to investors or however you raise, you can say, hey, we'll make a commitment to go public. And for existing companies, if you're already running a company now, you should look at ways to go public. You may have an opportunity to list one of your companies in your ecosystem. Let me explain that. So when you have an ecosystem of companies, a good lawyer, I'm not your lawyer, so this isn't legal advice, but a good lawyer will tell you that you should separate things. Your crypto should never be part of your main company because of the risk factor that's imposed by both. We had a very brief conversation about it. The reality is if you show up to many banks and you tell them you operate in crypto, they say thank you, but we're not really interested. So different companies within the ecosystem means that you can list one company while still having your crypto ecosystem working in the background. These are not mutually exclusive. They can work together. What about DeFi? Well, DeFi is huge at the moment, so I wouldn't be doing a good job if I didn't talk about it. The private trend is something that's coming down the pipeline. Within the next 6 to 12 months, you will see DeFi companies switch from the DeFi model back to the private company model. If you don't believe me, Uniswap is already in the process of undertaking that. I know 2 or 3 other companies that are also in the process of undertaking that. The benefit of being a DeFi company used to be, we're going to outsmart the regulators. That's the truth of it. The reality is now, there's good regulation, there's solid regulation. You don't need to play shadow games. You don't need to worry about a DAO. So let's get rid of it. So over the next 6 to 12 months, you will see companies begin to wind back DeFi operations. But as we have said to many of them, why not go public? Why not keep the spirit of what you are? Community engagement, raising money outside, and being able to really impress on people that we are a group rather than a private company. So, the loss risk. This is something that we have to talk about with many founders. Why not go public? Well, because the reality is that you lose control of your company. If any of you are familiar with the story of Steve Jobs, started Apple, had a great legacy, went through and burnt a few $1 billion of the company market cap, and they fired him. And that's the reality of what can happen when you take a company public. They can fire you. Eduardo, the co-founder of Facebook, fired, gone. So you have to accept the loss risk. We call this the loss risk, right? It's not your company anymore, but the plus side of that is you get a huge amount of cash. Now, why is that an important factor in all of this? Because a lot of crypto company founders and a lot of crypto companies have already accepted that fact. I don't get to make the decisions I want to make because there's about 16,000 people that hold our token, and I have to answer to them. That loss risk has already passed. And the advantage is, well, you get to keep control of your cap table, and there's no VCs, and then you can go public, and all of that goes away. So you can keep your whole cap table when you raise privately, and then you can go public while still being a crypto firm, selling a crypto token, ICO, STO, IPO. Expenses, is it expensive? Yeah, it's expensive. It is. Going public can cost millions of dollars, but it doesn't have to. Everybody immediately thinks it's going to cost me millions of dollars. I have to list on NASDAQ. I have to list on the London Stock Exchange. There are fantastic other exchanges. IPOs in Europe, if you're not familiar with it, it's the 5th largest exchange in the world. Liquidity is strong, good daily trading volume. Still a public market. If you jump on their small cap, it costs you about $150,000. Sounds a lot, but when you consider the average IPO on IPOs raises about 3 to 4 million, it's a pretty reasonable outset or outlay. So you have to think about different markets and where you want to attract. And I think I lost a slide, but that's okay. So effectively, you then also have a final opportunity here. IPOing isn't the end of the story. The initial public offering, the first time you sell it, and we're seeing this in the crypto space. Coinbase, Ripple, companies are doing this. But the reason it's important is because there's an uplift opportunity. When you IPO to a public exchange, like IPOs, like the London Stock Exchange, you can then uplift. So if you're thinking of this from a, how do I raise money? How do I engage with my community? Well, you can keep it going. So actually we go ICO, STO, IPO, uplift. And that's 4 very unique opportunities to raise money, to build your company, to expand it, and to turn it into what you know it to be today to where you want it to be. And that's a huge, huge amount of stepping stones that you've got. And I think one of the most important things that we have to think about as founders, or you have to think about as somebody who's looking to invest in one of these projects, is where is it going? Because if you don't grow your company, if you don't evolve your company, it's staying still. And as any founder will tell you, staying still is death. You have to evolve in any space. And that's why I now talk to a lot of companies and work with a lot of companies that go public because they've been around for 6, 7, 8 years. They have a great community. They made a lot of money. They do a lot of cool things. But after a while, they're stagnant. They get boring. And they need the ability to inject more cash into it. And that is open to every single one of you. One of the things that I had to come to grips with and learn is the concept of taking my company public is not a crazy dream. It's not, I have to spend $15 million and I go on NASDAQ and now I'm ringing the bell in New York. No, it's actually very doable. It's very feasible and it's very cost effective. You can list on different markets, you can uplift onto new ones, and it gives you the opportunity to grow your company. So, ICO, STO, IPO. Keep control of your company until you want to get rid of it, or go straight out to a community-driven fundraise. You have the opportunity. And that's why IPOs are the next organic transition for so many crypto firms, because it fits so well into their existing model. And a big thank you on the screen. Good. All right, guys, thank you so much. I think this is...
No, this, okay. This has to work as well.